And one thing we do know is that history is replete with events that we never saw coming, and it will have effects that we cannot predict. Things like COVID, the Great Depression, the Great Depression. I mean, we don't see these things coming. So how can you feel so confident that this simple path will be still a simple path without some kind of diversification of what we own?
So to be clear, when you own VTSAX, you own about 3,600 different companies. So extraordinarily diversified stock portfolio. I mean, it's as diversified as you can possibly get. Now, what you don't own is diversification among assets. And the reason for that is that stocks over time are the most powerful engine of wealth building. They're more powerful than anything else. And so when you add other things like bonds, which I do recommend when you're living on the portfolio, and Jessica's living on her portfolio now. So last fall, we shifted some of hers into bonds. That's going to be a drag on your performance. It's going to have the effect of smoothing the ride, but it's going to be a drag on your performance. As far as I'm concerned, the fact that stocks are volatile is not a problem. It allows a buying opportunity, right? So if you're putting money in every month out of your earned income, which is one of the essences of Simple Path to Wealth, when the market plunges, as it does on a regular basis, that's a fundamental part of it. That's not the end of the world. It's not an anomaly. That's just the way the market is. Well, now you're picking up shares at bargain prices. So if you have the right attitude, that volatility doesn't scare you. You embrace it as the gift that it truly is. So let's take a period of time, the most recent period of time when the market really performed poorly for an extended period. And that would have been the first decade of this century. So at the start of this decade, we had the tech crash, right? And the tech crash took stocks down, I think 46%, as I remember. And then the market went nowhere for a decade. I think for that first 10-year period of this century, the market returned, I don't know, about a negative 0.63%. It wasn't terrible, but there was no real gain. Then it ended that decade with the financial crisis, and that drove the market down 56%. So a really, really bad decade. But if you'd been following the simple path to wealth and you'd stayed the course, you would have had 10 years to pick up shares at bargain prices all along the way. And then beginning in 2010, well, we've had a unrelenting bull market since then. You would have benefited extraordinarily well. So even extended down periods don't trouble me. Now, let's look at something, what could really derail the simple path to wealth. And I don't worry about this, by the way, because in my world, the famous, I'm drawing a blank on the very rare event that.
The black swan.
Yeah.
Yeah.
In the event, I think it's a mistake to invest trying to anticipate a black swan that has maybe a 1% chance of happening. I'm going to construct my portfolio to prosper in the 99% of what's likely to happen. Okay. But there are such things as black swans. I think COVID's very instructive. So when COVID hit, my social media and blog lit up with people saying, JL, I understand the simple path to wealth and I understand that it's for decades, but this time it's truly different, JL. This time people are dying. This time countries are shutting down their entire economies. This time truly it's different. And my response then and now is yes and no. This time it's different in that we haven't had a pandemic for 100 years. So that's very different. But every time the market crashes, it's something different and awful because that's why the market crashes. It's always awful. Now, it's particularly tragic that people are dying, but in terms of how the market's going to react, it's going to be the same. The market's going to panic, it's going to plummet, and then over some period of time, And in the case of COVID, it was very brief, but nobody, including me, anticipated that. Over some period of time, the market will recover and resume its relentless rise up. Now, let's be clear. COVID killed 1 million people in the United States. Huge tragedy, obviously, for those people and for their families. But not to sound insensitive, a drop in the bucket against our population of 330 million didn't move the needle. But let's suppose that COVID had been like the Black Death in the Middle Ages. Let's suppose COVID killed 60% of the US population. Let's suppose that instead of 1 million people, 170 million people died. Well, now the simple path to wealth probably isn't going to work. Probably our civilization is going to collapse or take on an entirely different form. And that, of course, would have happened worldwide. There is no way you can invest to anticipate that. There is no investment that will, other than canned goods, guns, and ammunition in a bunker, maybe. There are, by the way, people who believe that that's going to happen and who are doing that. The simple path to wealth is, I think they're wrong. I don't think it's going to happen, but the simple path to wealth is not going to work for them. If it turns out to be right, it's not going to work for any of us. But I don't think you can construct a financial investment plan based on something like that happening, even though, of course, it's possible.